Hello and welcome to Global Flows. This is Patrick Brady, your host, and today we're going to delve into matters that move and shake the world with focus on global flows of money, people, ideas, cultures, goods, politics, and trends. All right, very cool. Today I am wearing my ugly sweatshirt. Yep, that's the Grinch, and I've got a ugly sweatshirt party to go to. I'm sure every one of you has the same. So here we are in the middle of December, and from what I can see, the news is pretty slow outside of global conflicts that we're not going to add as part of this show. But the holidays are coming, and that's pretty cool. Hopefully you guys, you and your families have a wonderful holiday season. I think I say that every time, but I really hope that that's true for you. Okay, let's get into it. We have a couple of interesting articles, mostly about forecasting for 2024. Here we are on the heels of another year, and is it going to be a great year? I think it will. Will it be great economically? We shall see. Okay, let us go to the first article. Okay, this article is by Fitch, the ratings conglomerate, one of three. Okay, world growth to fall sharply in 2024, but U.S. recession avoided. We shall see if that's true or not. Okay, here are the highlights. Global economic outlook for 2024. Fitch anticipates a sharp decline in world growth, dropping 2.1%, influenced by factors like China's property slump, stagnation in the eurozone, and full impact of recent monetary tightening. However, a recession in the United States is expected to be avoided. And regional growth forecasts and influence. The report highlights a revised upward growth forecast for 2023, with notable increases in the US and China's growth rates. In contrast, the eurozone faces a lower growth forecast due to challenges such as a slowdown in trade and tightening credit. And number three, monetary policy and inflation trends. That's been obviously a huge thing with in the last 12 months or really 2 years, interest rates popping up and inflation popping up. Central banks are expected to maintain restrictive rates to combat inflation. Okay. The word on the street is the Fed kind of pointing toward the possibility of three rate cuts in 2024, and certainly the Biden administration is going to put pressure on them to make the economy look as good as possible. So we can expect some rate cuts, I believe. Okay, moving on. This is a Mint, JPMorgan analyst. And, excuse me. All right, JPMorgan analysis predicts a surge in stock market worry gauge in 2024. Stock market performance and top gainers. Stock market's been pretty hot lately, and commodities and Bitcoin are hot lately. As of December 15th, 2023, exactly 1 year ago, notable gains were seen in the stock market, with HCL Technologies, data consultancy services, and Infosys showing significant increases. Market volatility predictions. JPMorgan predicts an increase in the stock market worry gauge, or the VIX. VIX anticipated to trade at higher levels in 2024 compared to 2023, which is the volatility index, as far as I know. Economic outlook and strategy recommendations. The outlook for 2024 indicates varying scenarios depending on economic conditions. In the case of a moderate recession, the VIX could reach the low 20s. That is interesting and cool. Okay, third article. Strategic. This one's put out by the World Economic Forum, which I'm not sure what to think of them. Largely, I do not think that they have best interest at heart. And I think many people share my opinion. But anyway, they have their own strategic intelligence outlook, climate litigation, economic strains, and more in store for 2024. Focus on 2024 trends and predictions. The World Economic Forum's Strategic Intelligence Outlook, centered on discussing upcoming trends and expectations across various domains. Experts provide forecasts and insight, particularly focused on the development and challenges expected to arise in the year 2024. Geopolitical and AI developments are going to be key discussions, changes in geopolitical strategies, and emphasis on increasing global conflicts and their durations. Okay, would be great if that didn't happen. I don't know about you, but I'm tired of global conflict, people dying, families getting torn apart, and causing lost generations for countries. I have a lot of thoughts on that one. Third, climate risk and global business outlook for 2024. The forum also addressed the escalating climate risks and their economic implications, highlighting the importance of integrating environmental considerations into business and economic models for 2024. And finally, this is a newsletter that I get from Meanwhile in China, which I think is a cool one, by Laura He from Hong Kong. There's a big hole in China's plan to boost the economy in 2024. What are we seeing here? Customers at a supermarket in Fuyang City, East China's Anhui province. Okay, here are the bullet points. Economic growth focus. China's officials have pledged to concentrate in economic growth in the upcoming year, emphasizing high quality development despite challenges in stimulating consumer demand. Number two, property market stabilization. We talked about that extensively here on this program. The government aims to stabilize the real estate market, which has been a significant factor in China's current economic issues, by accelerating construction in key areas. Number three, deflation concerns. China faces deflation risks due to the property market slump and weak spending, with plans to align total social financing and money supply with economic growth price targets. Let's see what we got here. There's when I lived in China, saw a few cranes, a lot of cranes, thousands and thousands of cranes. Morning commuters passing through a construction site in Beijing. A woman selects clothes at a shopping mall in Beijing. Offices of Zhongrong International Trust, a company partially owned by Zhongzhi Enterprise Group. Very good. Well, ladies and gentlemen, this concludes our time together. I do hope you have a wonderful holiday. Hopefully you're going to get to go to some ugly sweater parties, and be well, my friends.